In the previous video, we discussed about PE ratio. Now let's talk about something closely related to that, that is earnings yield ratio. Earnings yield ratio is also called as inverse of PE ratio. It means PE ratio comes in the denominator, and already we know what is PE ratio, which is market price per share divided by earnings per share. So just do a mathematical calculation. You get earnings per share in the numerator and market price per share in the denominator, and that gives you earnings yield ratio. So what does this ratio communicates? It communicates the percentage of earnings for every share value. So you know what is the market price. For that, what is the earnings you are having and what is the percentage of it. So that information will help you to compare this percentage with other investment opportunities. Let's say, for example, you have two companies, A and B. Company A is giving EPS of 4 and B is giving EPS of 5. So a blind comparison of EPS means B is doing well because it has got 5. But when you compare the EPS with market price is 10. So 4 on 10 gives you earnings yield ratio as 40%. And here in B, the market price is 20. So 5 on 20, the earnings yield ratio is only 25%. So in that way, earnings yield ratio will help you to take calculated decision.